Still under the chapter regarding the fundamental analysis and still into the introducing the economic calendar. This is the tool to be used when trying to take advantage of the fluctuations the economic releases or the volatility the economic releases are bringing to the market. Now this is a web page, the forexfactory.com, and this is the calendar. As I will try to explain to you a little bit what an economic calendar is and what does it means. This format that you are going to see here is basically the same on all websites that are providing the calendar, with the date and the time for the event to be released. Sorry for that. Then the currency pair that it is being influenced, or most likely referring to. The impact, as you can see here, this is the impact. This is less important, and with striking red, if I may say so. This is an extremely important economic event that this is going to influence the markets. Then the actual economic release, the details, and then you have here a forecast. The forecast is being made. The forecast is being made by having a bunch of experts, so to say, and being interviewed and asked regarding the possible outcome out of this release. And this is the previous value, and the actual would be here. The actual will be completed after the news is going to be released. And you can see this on the daily basis, on the weekly basis. This, for example, is for this week, starting from July the 14th, so basically from today until the July the 20th. And it should go, see, this is Sunday, then on Monday, these are interesting to see: Monday, Tuesday, Wednesday, Thursday, and Friday. You will also have here on the left screen the central banks, on the left side of the screen, central bank rates, and these central bank rates means the interest rate for the major currencies in the world. As you can see, Australia is on the first place with 2.75. Funny enough, even though the rates are at a minimum historical level, they are still having the highest level in the world for developing economies. 2.75, New Zealand dollar in New Zealand 2.50%, Canada 1%. So all the commodity related countries have an interest rate, let's say, bigger than the rest of the world. See Europe with 0.5, in the UK 0.5, also historical levels for the interest rate in the United Kingdom. In Switzerland we have less than 0.25, and in the United States less than 0.25, not to mention Japan. Nobody really knows what's happening in Japan these days. Coming back to the economic calendar, so this is the calendar for this week. See here, from the 14th until the 20th, and if you click here on the left, this is the economic calendar for the previous week. And see, here are all the releases are being completed, and the results are written here on the actual data. Let's take a look here. For example, on this line, this is a news related to German trade balance. It is most likely to affect the euro. It is of a medium importance. See, medium impact expected, and the German trade balance has been forecast to be 17.4 billion. The previous was 17.5, and the actual release was 14.1 billion. And this is being written with red because it is less than the previous, not less than expectations, less than the previous. Less than the expectations that the expectations market has. Or, for example, there are releases, economic release, like it's this one, the Eurogroup meeting. This is with high impact expected. but they have no previous forecast or actual data because there is no data to be associated with such meetings. However, they are being noted in the economic calendar because sometimes at the end of these meetings the representatives came and give press conferences. Important events are being, important things are being discussed there. Important decisions are being taken, and markets may react to such declarations. So this was happening last week, for example. See the manufacturing production in the United Kingdom, most likely to affect the Great Britain pound. So you have here minus 0.2 was the previous one, 0.3 were the expectations, and minus 0.8 was the actual release, and so on and so forth. Let's go on the week two. As you can see, this is Sunday, and let's try to look at each event for this week. This is Sunday at the 7:01 p.m. This is going to be an important release news for the Great Britain pound. The impact is low impact, expected the right move HPI. Let's see what the right move. You have the detailed button, so you actually may click the detailed button and see what it means. Well, this is the UK's earliest report on housing inflation. As you very well know, inflation is the thing that matter the most when central banks are deciding upon the monetary policy to follow. Each central bank has a mandate, and the mandate, or within the mandates of a central bank, inflation has a specific target. The developed economies in the world, the central banks that are running them are having the mandate to keep inflation below or close to 2%. Now in Japan they are trying to do the same, to keep inflation below or close to 2%. As before it was only 1%. So any news relating to inflation is extremely important. But this tends to produce a relatively mild impact because asking prices and selling prices are not always correlated. So this is why probably the impact expected is low impact expected. And you have here the history, the latest release, and this is how it should be interpreted. This is released monthly, around 3 weeks in the current month, and the usual effect is that if the actual is higher than the forecast, this is good for currency, and this is how it should be interpreted. Then we have a bank holiday in Japan, so we know that in Japan banks are on holiday. In Australia we'll have the new motor vehicle sales, and new motor vehicle sales, we'll look at the details. That means the change in number of new cars and trucks sold domestically. You might ask, why is this important? Well, it is important because the number of cars sold are reflecting specified for a specific consumer power and spending power, and this is highly to influence the further more important GDP's data and so on. This is released monthly, about 16 days after the month ends, and it's a sign of consumer confidence. So rising demand for expensive durable goods shows that consumers are confident in their future financial position and feel comfortable spending money. So this should be viewed good for the economy. So the usual effect will be the higher the release, higher than the forecast, then this is good for currency. And then you can apply this in trading your financial products, in trading your binary options on the short term and medium term, and so on and so forth. There is also a short history here on the releases. As you can see, on the previous release on June the 16th, the actual was 0.0%, so basically a constant. On the previous one, it was minus 0.77% and minus 0.1. And if you want to do a trend, and if you want to identify a trend based on this, then you just look at the previous and actual for the last, 6 weeks, and just apply them on the chart, and you have a trend regarding the change in number of cars and trucks sold domestically. Let's move on with with more details, but on the next recording.